Alright, hi everyone. Welcome to today's webinar, which is the pre-market live analysis brought to you by IC Markets. I'm just waiting for a couple of minutes before we start. Just want to make sure you guys can see my screen. I should be showing the presentation screen, the opening slides, IC Markets webinar, pre-market live analysis. And just want to make sure you guys can hear me loud and clear as well. And do take note of the live chat box, right? So do drop your questions or any custom requests that you may have in this live chat box. Yep, we'll be just about to start in a minute or less. Let's just wait for everyone to start tuning in, and then we can start. Just want to make sure you guys can hear me loud and clear. All right, hi Solomon. All right, great. Okay, Desmond's on holiday, right? So I'll be taking over today's session, right? Desmond's, I believe, should be in the UK or on the way to the UK already. He's going to enjoy, I guess, a late summer holiday in the UK, right? So, yeah, just want to make sure you guys can hear me. Hey, Fabio, all right, great, great, okay. All right, guys, okay, I think we're good to go, and judging by the comments. All right, hi Nick. Just a quick question: would it make sense to start something spicy? Hi, morning Nick. All right, yeah. Usually that's what we do. We'll usually start off with just a quick recap of what has happened in the previous week in terms of key news events, and then what to look out for this coming week, and then we generally start with the DXY, the analysis on the DXY, as you rightly have said that it it has all the impacts on all the major currency pairs as well as gold as well in terms of positive correlation and negative correlation. All right, great. Okay, I think we're good to go. So I'll just turn on my video in a bit right after we get through this disclaimer. Okay, so please take note that this is marketing communication. It does not contain, it should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for transactions in financial instruments. And the analysis contained herein does not constitute a personal recommendation. It does not consider your personal investment objectives, investment strategies, financial situation, or needs. Also, do take note of the risk warning that comes with trading Forex and CFDs, as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Trading Forex and CFDs may not be suitable for all investors, so please ensure that you fully understand the risks involved and seek independent advice if necessary. All right. Okay. Let's just turn on the camera as well. All right. Okay. Just as we mentioned earlier, we'll just start off by going through the key news events. Then we'll dive off into the analysis on the majors, starting with the dollar index. All right. Okay. So my name is Ketan Ramachandra. So I'm an analyst here. So, at Everest Fortune Group. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we've been the finalists for Best FX Research and Equity Research for 2019, 2020, and 2021. All right, so we'll just start off with a brief recap of what happened last week, so we can quickly analyze as well what has happened with the dollar index and naturally how that would impact the major FX pairs as well as commodities such as gold and oil. All right, so last week, pretty much we had a lot of employment data coming out of the US, and we had a bit of inflation data as well. So, what was these main key events? Well, we had the JOLTS job openings on 29th of August, followed by the ADP employment change on the 30th of August. Both of these were labor market data. Then we had the PCE price index. This is personal consumption expenditure. This inflation gauge is actually the Federal Reserve's preferred gauge of inflation. Of course, they do look at the CPI numbers and the PPI numbers that are released by the BLS or the Bureau of Labor Statistics, but this is another measure that they look very closely at as well. And of course, On Friday, 1st September, we had the big one, non-farm payrolls that were released as well. Right, morning. Hi, everyone. Morning. So yeah, Fabio, Solomon, Nick, Philip, and Sige as well. All right, hope I pronounced that right. Okay, right. So as you can see, these were the four main uh, data news events that came out last week, and they had a pretty strong impact on the direction of the dollar index. Right. Okay, so this is Joel's jobs openings data. So this data that was released on 29th of August was for the month of July. So we have July's data coming in. So if you can see on my chart here, for July, there were 8.8 million job openings listed versus the estimate of 9.5 million. And in the previous month's reading, June, was 9.2. This 9.2 reading was actually revised lower as well. Okay, so what does jobs opening means and how can we interpret this data? Okay, so basically this is telling us the number of vacancies that are being advertised by US corporates. So naturally, if you have a number that's increasing, as we saw as we came after the pandemic lockdowns, as economies started to reopen, this job openings number started to increase. So this signals that the labor market is looking to hire, so companies are looking to expand. Right. So what happens in the opposite? If the numbers starting to decline or trend lower over a period of time, this means that US corporates are slowing down their hiring policies or their hiring operations, and it could signal that the labor market is probably getting saturated or getting close to peak capacity. Right. So how can we interpret these numbers? Right. This number here, as you can, that's highlighted by my cursor, was the number for the month of July. Right. This number was month of July. All right. Hi, Mando. Okay, if you've just joined us, Desmond's on holiday. Right. So I'll be taking over today as well. Right. Glad you could have joined us for today's session. All right. So just getting back to Joel's opening data. So this number of 8.8 million was for the month of July. The estimate was 9.5 million. So a number that comes in lower than the estimate generally signals a bearish catalyst for the dollar index. Right, that means you have less job openings, so the labor market is probably starting to slow down in a sense. So that means this is negative for the US dollar and hence negative for the dollar index. And the second thing to note was that this is June's number, which was now been revised down to 9.2 million from, I believe, about 9.7 million as well. So even for the month of June, the number was revised lower, plus July's number came in lower than the estimate. So this would signal or would act as a bearish catalyst for the dollar index. And conversely, if this number actually came in higher than the forecast, this would generally act as a bullish catalyst. So as you can see, on 29th of August, that this indeed acted as a bearish catalyst uh, for the dollar index. All right, hi Fabio. Joel's NFP unemployment is showing recession is ahead. All right, it's not actually showing a recession is ahead, but it's just starting to indicate a potential slowdown in the labor market. But if we do see um, these figures along with unemployment claims. Remember, unemployment claims come out on a weekly basis, so that's we get a more quicker update that could potentially signal a major slowdown in the U.S. market, and perhaps potentially we may run into recession. All right. Okay. So how did this impact the dollar index? All right. So here I am on the chart for the dollar index. I'm on trading view. Currently I'm on the daily time frame, but let's just quickly go in onto the 1 hour time frame and go on to 29 August. All right, so if you go in to 29 of August, and this data was released at, I believe, 2 p.m. or 1400 hours, so which is right here. So if I zoom in a little bit here, right, okay, so here we are. This is 29 August, 1400 hours. Right, on this candle, just before this candle closed, the 1 p.m. candle. Okay, note that I'm on GMT time, so I'm on 1300 GMT time. So this candle closed at 104.20. The news Joel's data came out at 1400 hours GMT time, 29 August. Candle opened at 104.22, and in a period of a few hours dropped as low as 103.36. So you can see that how the lower JOLTS data for the month of July plus the revised number for the previous month had a very bearish impact on the dollar index. Okay, so this is how we can interpret the data and use it to quickly take a position on the market as well. And then on the 30th of August, we had ADP employment change. So this is also tracking in a sense like sort of equivalent to non-farm payroll market, but this is done by a private company, right? The difference between ADP employment change and BLS non-farm payrolls is that BLS is a government agency, whereas ADP is a private organization. They're both surveying the US labor markets, but probably looking at slightly different companies as well. Right, just the main key takeaway to take from the ADP employment change that took place on 30th of August was that, okay, the number came in at 177,000. So 177,000 jobs were added in the month of August. This was lower than the forecast of 194,000, and it was also much lower than June's number and July's number. So of course, June and July we had blowout numbers in terms of employment change, but the latest reading came in much lower than the forecast as well. All right, and some of the reasons for this lower change in employment was led primarily due to leisure and hospitality sectors, right, where job growth has slowed quite notably after months of strong hiring, right. So this combination of uh, not combination, but this result of 177,000 jobs was quite low, or pretty much lower than the estimate, which again acts as a bearish catalyst for the dollar index. And conversely, if this number came in higher than the forecast, we can expect a bullish cat for it to act as a bullish catalyst. So if we go back to the charts, we go to 30th of August. That's when this data was released. So I'm on the 1200 hour candle. So ADP data is released at 12:15 p.m. GMT time. So as you can see, the DXY opened at about 103.54 and dropped as low as, what is this? Just dropped under 103 in a couple of hours. So once again, you can see how the negative data had a very bearish impact on the dollar index. Okay, right, now let's just quickly go on to the other two data points or news events that were released. Okay, so this is July's readings for the PCE price index. So in for the month of June, year-over-year PCE, or the head for this is headline PCE, both on an annual change or year-over-year change. So in June the reading was 3%, and in July it ticked higher to about, I believe, 3.1% or 3.2%. And for the core reading, it came in at about 4% in June, and it ticked higher to 4.1%. So basically we saw PCE price index for headline and the core readings inch higher as well. So we all know if inflation is starting to edge higher again, this could generally act as a bullish catalyst for the dollar index, right? So after months of headline PCE reading retreating very sharply, we finally see another slight increase in the month of July. Right? And similarly for the core reading, which was relatively stubborn or sticky, right? It was ranging, it was coming in at about 4.5, 4.6%. It finally went over the last 2 months, but now for the month of July, it's starting to edge higher again. Now, does this mean that inflation is creeping back in? Maybe it is, right? Because even if you look at the CPI and PPI data, this is CPI here on the left. After months of sharp retreats or sharp pullback, it actually edged higher again from about 3% to, I think, 3.1 and 3.2%. Similarly for PPI, which was retreating very sharply as well, falling as low as 0.8% in June, it edged up higher to about 0.8%. So we see two different inflation data points, one from CPI and PPI. This is measured by the BLS, or Bureau of Labor Statistics, which you can see here as well. And then you have The PCE price index, which is measured by the Bureau of Economic Analysis (BEA). So both of these agencies have signaled that inflation data for the month of July has ticked higher. Now, is this going to continue moving forward? It's something that we need to keep an eye on. So this increase in inflation is going to act as a potential catalyst or bullish catalyst for the dollar index as well. And then finally, moving on to non-farm payrolls, I would say this was a mixed result overall when we look at the actual non-farm change and the unemployment rate. So unemployment rate actually edged higher from 3.5%. The forecast was 3.5% as well, but it edged higher. So this should generally on its own act as a bearish catalyst for the dollar index. But we had the NFP number actually come in higher than the forecast of 169,000, and it was also higher than the previous month's reading. But to take note, the previous month's reading was revised lower as well. So to me, this signals a bit of a mixed reading in terms of NFP numbers. But actually, if you look at the price action for the dollar index actually closed higher on Friday as well. Thursday, Friday, dollar index actually sort of formed the bottom and edged higher, right? So we'll go into the dollar index now and see how it closed on Thursday and Friday. All right, hi Joey. Yes, definitely we'll look at WTI and the Aussie as well. All right, hi Kelvin. All right, so just to quickly see how the dollar index traded on the last 2 days of the previous week. Right, so here we are. This is 31st August, 1200 hours and 1300 hours. So PCE price index data was released at about 12:30 p.m. GMT. So you can see how the increase in PCE readings acted as a bullish catalyst for the dollar index. It had already started rising here. You can see dollar index bottom at about 103 roughly, right, on 30th of August, and then stabilize and trade sideways between, I guess, what's this, 103.20 and 102 or 103 as well, a very narrow range before going higher. And part of the reason is we had the higher PCE data, right, which acts as a bullish catalyst, and also non-farm payrolls, which is also released at 12:30 p.m. GMT. Initially, you can see that dollar index actually dropped lower as well, all the way to about 103.28 before reversing to go higher. Right. Okay. So we're going to start on the dollar index as well, starting with the daily time frame. But let's just quickly recap. Not recap. Look at what we can expect on the calendar moving forward. All right. So we've got first of all today for September. It's Labor Day in US, so this is a bank holiday. So we're gonna have stock and bond markets closed. So whoever's trading uh, the US stock and bond markets, please take note they're going to be closed today. So there's not going to be any action. Futures markets will be open. Currency markets will be open. Commodity markets, futures, all will be open. So, but we can expect lower trading volume towards the end of the day, right? Since US markets are closed, right? It's a bank holiday. Everyone's We can definitely expect much lower trading volume in the latter part of today. But of course, once Asia and Europe comes online, we should see a pretty decent level of trading volume. All right, so we have two bank rate announcements coming up today, this week rather, sorry, 5th of September. We have the RBA, or Reserve Bank of Australia, announcing their cash rate statement, followed by the Bank of Canada on the 6th of September. And then we also have US unemployment claims coming up on 7th of September. As I mentioned earlier, US unemployment claims, this data point is released on a weekly basis, so we get a more updated look into the health of the labor market, right? Okay, so start off with RBA. All right, hi Jabilu, good morning, good to see you. Hi Ruben. Yes, definitely be covering the euro as well for sure. All right, so over the last two meetings, RBA has held the cash rate at 4.1%. They've kept it steady. And going into this meeting, it seems it's quite likely they're going to hold their cash rate at 4.1% again for the third meeting in a row. Now, primarily, this is due to uh, a very nice decrease or pullback in the CPI data coming out of Australia. As you can see, this line in blue is the monthly CPI indicator, which went as high as about, I believe, about 8.4% or 8.3% uh, right at the end of last year or earlier this year, but it has been retreating sharply. So this combination of slower inflation growth plus slowing PMI numbers as well means that the RBA is very likely to keep interest on their cash rate at 4.1% again, which could act as a bearish catalyst for the Aussie dollar, right? So this could be a potentially acting as a bearish catalyst for the Aussie dollar when this rate announcement is made. But we also have to take note of the statement itself, whether the statement is hawkish, neutral, or bearish, and also the press conference, should there be any. Right, moving on quickly over to the Bank of Canada. All right, high spring fall. Dow Jones, yep, we can cover that as well for sure, no worries. All right, okay. Then we have Bank of Canada, who have kept their bank rate at 5%. And because we also see inflation in Canada retreating very sharply, but of course the last previous month's reading actually edged higher. Now this may result in the Bank of Canada perhaps maybe trying to raise interest rates one more time again. So this leaves us this is a bit open, I believe, because although we see headline CPI retreating very sharply over the last 10 months or so, or 12 months, right? But the last reading actually ticked higher, so we have to see whether Bank of Canada, are they going to hold rates, or do they might or will they increase it again, right? So this kind of feels a bit open, whereas for RBA maybe seems a little more straightforward, where they are likely to keep the cash rate at 4.1%. All right, and finally moving on to unemployment claims. Right, so how can we interpret unemployment claims, or what are unemployment claims? Basically, these are uh, this is a data point that tracks the number of U.S. citizens who are filing for unemployment benefits. So, right, this data point is tracked on a weekly basis. So, if you have a number that comes in lower than the forecast, so do take note the forecasts are in these orange bars, highlighted by these orange bars, and these blue bars, of course, are the actual numbers, weekly numbers. So if these numbers come in lower than the forecast, this generally signals or acts as a bullish catalyst for the US dollar as well. And in this case, like in this bar here, as seen on my cursor, this for this particular week, the data came in stronger or higher than the forecast. So this usually acts as a bearish catalyst for the US dollar, because higher claims means that the labor market might be showing signs of a slowdown. So if there are more claims coming in higher than the forecast on a weekly basis, we could eventually see an unemployment rate tick up as well. So this is how we can interpret the US unemployment claims. All right, okay. Now we're just going to dive in straight into dollar index, and of course, once we know how the dollar index is trading, where the major resistance and support levels, we can know how it can have the impact on the currencies such as the euro uh, and the pound, as well as gold as well, because dollar index has a negative correlation with these instrument pairs, and conversely, uh, with the dollar franc and dollar yen, dollar index is going to have a positive correlation. All right, so here I am, or here we are on the chart for the dollar index, and I'm on the daily time frame. All right, hi Amar, good to see you as well. All right, from Italy, nice. All right, good morning. Okay, so we've gone through, we've had a quick recap on how last week's data has impacted the direction of the dollar index. Remember, I'm on a daily time frame. So 29th August here, we had Jolt's data being released, which acted as a bearish catalyst. On 30th of August, we had ADP numbers, which again acted as a bearish catalyst, but the week rounded up with relatively bullish catalysts, as higher PCE price index data caused the dollar index to push higher, followed by the NFP number as well. Right. All overall, the BLS numbers were sort of mixed in my opinion, but it does seem that the higher NFP reading, which came in higher than the forecast, acted as a very bullish catalyst for the dollar index. Right. Okay. Now, where are our resistance levels? All right. In terms of resistance, right, we can see a nice overlap here. We can see a pretty significant swing high here, right? That took place over the end of May, early June. And not only is this a significant swing high, but if we were to use a Fibonacci extension, right? So we've done a Fibonacci extension, or we've used the Fibonacci retracement, going from this swing high here on the 6th of July, ending with the swing low on 14th of July, and we've used this extension level to help us identify or to give another supporting factor to the significance of this swing high here. So this first resistance level is identified by the combination of this significant swing that took place at the end of August, early June, plus we are also using the Fibonacci extension level at 127% to act as a supporting factor. Right. So as you can see, as the dollar index ended the week strongly on Thursday and Friday, and it's quite likely we may see it push higher this week as well. So that's why the major resistance is going to come in for the dollar index, which is at 104.71. Now, with regards to the second resistance, we have a very nice, another significant swing here, right, that took place in early March as well, right? So these are our two resistance levels for the dollar index, and it's quite likely going on uh, the the economic data points that came out on Thursday and Friday last week, this could continue to act as a bullish catalyst for the dollar index. So if it does open higher today, and it's quite likely going to run into some major resistance at about 104.70. Right, to the downside, okay, let's just zoom in a little bit here. To the downside, we do see another decent swing that took place, right, on 6th of July, early July, right? And also we see price running into a little bit of resistance here on 22nd August, 23rd of August. So we've identified this level here at 103.61 as an intermediate support level, right? So this level has been identified as an intermediate support level based on this swing that took place on 6th of July. And we also see a little bit of resistance, pullback resistance here on 21st and 22nd of August. Right, but the first major support level is coming in at this overlap at 102.87. So you can see price running into major resistance here back in early August, and after price broke through, it found support just above this level in the middle of last week and Thursday as well. Right, so this is where the first major support for the dollar index comes in, which is at 102.87. And also by now, I'm sure all of you would have noticed this bullish channel as well for the dollar index. It's had a very strong uh, upward move since middle of July. So it's almost 6-7 weeks of strong gains in the dollar index, right? And the second support is identified at this overlap level here, because once again we see another nice significant swing, right? In this case, this is a swing bounce. Lowest, this is made of a swing low here. So this is this overlap level where price found support at 101.92, and then after price broke through it, it did find support again on 4th of August as well as 10th of August. So we have a nice overlap level here. And not only that, we also have an additional supporting factor to contribute to the significance of this level, which is the 50% Fibonacci retracement level. So this Fibonacci retracement level was drawn from this swing low on the 14th of July, and we ended it on 25th of August. So looking at the 50% here, it lines up pretty well with the overlap level as well. So we have two factors that give strong significance to the second support at 101.92. Right. So now, of course, if dollar index had a strong close last week and we expect it to push higher uh, at today's open, right, or the earlier the week, do take note, right? It is Labor Day in the US, so there's going to be much lower trading volume in the latter part of the day. So maybe we can expect markets not to be moving as quickly as we expect, because we're not going to have the full trading volume as we usually expect. Right, but of course we have Asia and Europe coming online, and especially as once Europe comes online, we'll get much better trading volume in the middle of the day. All right, so now we know what the dollar index has been doing over the last week and how it most likely is going to start this week. So naturally, we're going to see the euro in a strong downtrend as well, right? So naturally, once the euro, we saw the dollar index during the same period a rise, right, from going from 18 July, mid-July till end of August. We saw the dollar index gain very strongly, so naturally the euro is going to fall as well, right? And then especially after the PCE data and non-farm payrolls last week, we saw demand for the dollar index pick up again, and naturally the euro fell from what is this 109 1.0933 all the way down to about 1.0767. All right, so if we zoom out a little bit on the euro, you can see that there was a nice ascending trend line where price has bounced off it relatively close to it on middle of March and then in early June, and as well as 25th of August Friday as well. But now price is breaking through this ascending trend line, or has already broke through this ascending trend line last week. Now this could signal a potential bearish move to the downside as well, right? Because we have this nice strong ascending trend line which is broken, and now we could see this could act as a trigger for the euro to fall towards the first support. Right, this first support is at 1.0693. Right, how did we identify this level? Because we can see major significant swings at this price level. Right, we can see one significant swing here, a second one here. Then after price, you can argue price found a little bit of support here, not the best significant swing, but price did find support here in early Feb. And of course, once price broke through, there's another major swing here in March, and then of course price went higher, and then we have a very big significant swing here that took place on 5th June as well. So you can see multiple instances where price has bounced off this level or reacted off this level, be it as a support and resistance. So that is why 1.0693 we suspect is going to act as a major support level for the euro. And not only that, we've also done Fibonacci retracement starting from this swing low here on the 6th of July, ending with the swing high here on 18th of July. And then we're using the Fibonacci extension here to help us act as a supporting factor to the significance of the first support. Remember, Fibonacci extensions are all about the Nike tick. You can see a very nice Nike tick here. Right? Now in this case, this is an inverse Nike tick. Right? So because we have seen price reverse from this swing high on 17th of August and starting to drop through the 100% as well. So 127% Fibonacci extension level is going to act as a potential major support. And not only that, this level also lines up with this nice overlap here at 1.0693. So this is how we've identified the first support, and I think we can really expect the euro to hold up around this level. All right, now what about the second support? Second support is identified at this pullback level here. Once again, we see price bouncing off this. We can see a significant swing bounce here in January. You can see two swing, or rather three swings here, right, on from the low side on end of Feb, early March, and mid-March as well. Right, so multiple instances where price has bounced off this level, so that's how we've identified the second support. So this is a major pullback support level at 1.0526. Now, what about to the upside? Right, so as you can see, price has made a very significant swing here towards the end of last week, and after going as high as what is this 1.11271 in middle of July, the euro found support here at on the 3rd of August at about 1.0933, and then finding support again, a little bit of support before finally breaking through. So we can see price reacting off this level a couple of times, or 2 to 3 times, and that's how we've identified the first resistance at 1.0933. All right. Of course, we're not going to. Okay, at this point in time, let me just tidy up the chart a bit. Right, at this point in time, we're not going to identify the second resistance because price is simply just too far from where we are trading, right? And we can see price is currently closed at 1.0767. First resistance is 1.933, so that's almost what is this, 130, no, 160 pips away, right? So the second resistance is a bit far to identify for now, but we'll get to that, of course, as the week progresses, right? So, of course, on tomorrow's analysis, we're going to be going in at the 4 hour time frame, so where we can see more actionable resistance and support levels. Okay, so this is for the euro. Okay, then we'll quickly go on to what was that? All right, since we're on the dollar and we've got RBA coming up as well, so let's go on to the Aussie dollar, right? And then we can go down into oil, WTI, and then we'll go into Dow Jones as well. All right, and of course, if there's any other request for analysis on any of the other commodities or instrument pairs, we'll definitely get to that as well. Okay, so here we are on the chart for the Australian dollar, right? So of course, so if dollar index has been rising, you can expect the Aussie to be falling. Right, okay. So as you can see here, we've used the Fibonacci retracement tool, starting with the swing low here on 13th of October, going up and ending it on the 3rd of August. We're currently using the 78.6% Fibonacci retracement level to help us identify the first major support, which is also uh, been labeled as a downside confirmation. Why do we call it a downside confirmation? Right, we'll get to that. First, we can see a pretty significant swing here, and then of course very tiny swing here as well, and also we just look at the candles and the mix, a tiny swing here and also another swing here as well. So we've seen price react off this level multiple times, and you can see a double bottom here as well, right? So you can see multiple instances where price has bounced off 63 cents, 63.89 cents for the Aussie dollar. Now why do we label this downside confirmation? Because as you can see, since middle of August, we can see that the Aussie has sort of ranged between 63.89 and 64.99, right? Ranging between in a range of about 100 pips. So what we're looking for is a downside confirmation, because this is a very uh, has acted as a very strong support level in the past. There is a possibility that the Aussie dollar could bounce off this level to continue ranging between 63.89 and 64.99. Now, we've labeled this as downside confirmation because if the dollar index continues to rise, and if of course the Aussie breaks through this level, then it's quite likely it's going to drop lower, right? And the first major support comes in at this swing low that took place on 17th of October, right? We can see a very significant swing that took place here, and that's how we've identified this first major support, right? And I guess if you can see, because it's pretty far from where any other levels is, maybe if you can try and identify perhaps an intermediate level. Okay, I'm going to use the Fibonacci retracement tool, starting with the swing low, going up to the swing high here. Right, I'm going to use the 127 and 161 Fibonacci extension level, see where they lie. Alright, okay, cool. Okay, so we can see the 161 Fibonacci extension level lies very squarely with the swing low, so we've got a supporting factor for the first support level. And if we want to see, I guess, some sort of intermediate support, I guess you could probably identify this zone, because I see a pullback level here as well. You can see price making a pullback here. So if we want, because the first support is pretty far from where price is currently trading, so even though we do see the downside confirmation, right? Remember, if RBA does not raise rates and they come out with a relatively neutral statement, we could see the Aussie dollar come under pressure, and then we should see the downside confirmation play out. And where can we expect some level of support? Perhaps we can see this pullback level here where price made a pretty decent swing as well. along with where the 127% Fibonacci extension level lies. Perhaps this zone between, what is this, 62.91 and 63.50 could act as some level of support should the downside confirmation take place. And of course, the first major support for the Aussie dollar on the daily time frame is at this major significant swing, which took place on the 13th of August. Right, okay. From here, we'll move on to right, okay, we'll move on to oil, then we'll go on to Dow Jones and anything else that you guys would like us to cover as well. Alright, so here I am on the chart for WTI oil. I'm on the daily time frame. Alright, so since sort of mid-August, you could say for 2 weeks, let's just go into the weekly time frame for the last, right, so, okay, since end of June, actually oil has climbed very strongly. You've seen what 6 weeks, 1, 2, 3, 4, yeah, about 6 to 7 weeks of strong gains in oil, followed by 2 weeks of strong pullbacks as well. And then last week, we've had oil finish very strongly uh, as well, right? So it does look like it's, of course, it first of all it broke out as well, right? If you look on the weekly time frame, apologies, let me adjust. We can argue that, let's see, yes, if we look at here, price broke out as well. Maybe a strong breakout here. So on the weekly time frame, if we look at it, right, and then if we go into the daily time frame, we can see it probably a little bit better. Right, yes, okay, so here I am on the daily time frame of WTI. So you can see price actually broke out on the 20th of June, but it was a failed breakout. Price actually went to make another low as well. You can see a very uh, strong support level here, which was at 67.62, before price finally broke out again to go much higher. And of course, if we look over the last 2 weeks as well, uh, right, last 2 weeks we saw price breakout as well, right? So this time we had a much clearer, there were no real failed breakouts. So when price broke out on 28th of August, it managed to stay above the descending trend line and climb higher as well. So we've seen a bullish breakout in oil early last week, and which is why we've seen a very strong finish, a good strong bullish move to the upside for oil. All right, okay, now where are the major support and resistance levels? Okay, let's just zoom in a little bit. Uh, all right, okay. So in terms of support, not only did we have see price break out of this descending trend line, we also saw price break above this strong overlap resistance. You can see that uh, this level at $82.70 has acted as a very strong, or has acted as a very significant uh, overlap level, where you can see price making a significant swing here, right, multiple times, and as recently as early or mid-August as well. So you can see multiple times where price has reacted off this level. So we had another breakout in WTI oil as well. So we've identified this previous breakout level as a major support level now. And we've also highlighted a zone as well. As you can see, the wicks of these two candles, they lie at about 84.10, 84.30, sorry, about, yeah, 84.40. So this is the first major support zone for WTI. Now what about resistance? Right, we can see a very nice double two swing highs here, multiple swing highs here that took place at 91.95. So this is where we can expect some major resistance to come in. But what about something a little bit closer? So we've used the Fibonacci extension tool. Right, so basically if you look at Fibonacci here, we have Fibonacci retracement. This is what we use for finding using retracements and expansions and extensions. And then we use the trend-based Fibonacci extension tool to help us find identify projection levels, right? So the extension tool uses 3 points. So we started with the swing low here on 29th of June, going up to the swing high here on 10th of August, and ending with the swing low here on 23rd of August. So it's 3 points, 1, 2, 3, and we're using the 61.8% and 78.6% projection levels to help us identify the resistance. Right, so we can see that we're using the 61.8% Fibonacci projection level to identify an intermediate resistance level, which is 88.39, and we are using the 78.6% Fibonacci projection level as a secondary factor or supporting factor to this multi-swing high at 91.95. So I'll just highlight this a little bit as well. See this zone here, right? So this is what we have on WTI in terms of where the resistance level lies, where the first support is, and at the second support we see a nice overlap level as well, because you can see a pretty decent swing here that took place on 13th of July. And then once price broke through, price bounced off this level here as well on 24th of August. So 77.48 is where the second major support for WTI oil lies, and it's a very nice overlap level. Alright, so this is WTI oil. Yeah, so we've had very strong gains in oil as well, and we might see it push higher uh, as we speak. Yeah, because after this breakout, we've had a double breakout here, right, from this descending trend line as well as this overlap resistance. So we've seen two breakouts that have occurred over the last 2 weeks or 10 days, I suppose. Yep, about last 10 days, and this does signal a very bullish movement or further bullish movement for WTI oil. Alright, okay, since we're on oil, let's just cover gold as well, and then we'll move on to Dow Jones. Alright, so gold prices and the dollar index are usually very strongly negatively correlated. So what does that mean? So that means if dollar index is rising, gold is falling, and obviously the opposite is true as well. So if gold dollar index is rising, gold should be falling as well. So after we've seen gold had a pretty strong rise from 18th of August going up to 1st of September. Let's see, is this negative correlation played through as well? So 18th of August, which is about here. Alright, so actually dollar index went higher first and then went lower. So you can see the correlation or negative correlation sometimes doesn't always hold true. So it's sometimes important to take note of that as well. There are instances where the negative correlation can break down as well, and this way it seems it has occurred, because if you look at the dollar index from 18th of August to 25th of August, during this 1 week it actually went higher. But if you look at the same period on gold, 18th of August, right, towards all the way to 25th of August, it also went higher as well. So in this instance, over this period, there was no negative correlation between gold and dollar index. That negative correlation actually broke down, and this was a rare period where uh, gold and the dollar index had a positive correlation. So you can see how the correlations can break down over certain periods of time, and then how they may resume again. And then so when we had dollar index starting to pull back on 28th of August till 30th of August. So let's see, 28th August. So this is now gold. Okay, 28th August. Yep, here we go. This is where the negative correlation comes into play again. It started getting more stronger. Negative correlation started getting more stronger as 28th of August. Dollar index started to fall all the way to 30th August. That's when gold rose strongly as well. So you can see very quickly in a period of a week where the negative correlation between gold and dollar index actually broke down, right? And then finally that negative correlation grew stronger again, and it actually started to play out. Right, okay, so we can see price is testing a strong descending trend line for gold, right? And we've used that descending trend line together with the 61.8% Fibonacci projection level as well as this overlap level as well. So let's just slowly break it down. Right, and zoom in. Right, so we've also used a Fibonacci retracement level at 61.8% to help us identify the first resistance. So this retracement level Or this retracement started from this swing high here on 20th of July, ending with the swing low on 17th of August. So we've used the 61.8% Fibonacci retracement level here. This lines up pretty well, or quite close to where this overlap level is at, which is 1945.30. And we've also used the 61.8% Fibonacci projection, because the Fibonacci projection is a tool that uses 3 points. So it started from here, 29th of June, going up to the swing high here on 20th of July and ending with the swing low on 17th of August, and we've just used 61.8% Fibonacci projection level. Let's just see where the 78.6 lies as well, to just give us an idea. Right, so 78.6% Fibonacci projection lies here, but we don't see any strong overlap levels here, so I think we'll just keep the 61.8%. Alright, so we see a very strong resistance zone for gold, which is the combination of this descending trend line, the 61.8% Fibonacci retracement level, the overlap level at 1945.30, as well as the 61.8% Fibonacci projection level. So we have four factors that are contributing to a very significant resistance zone for gold prices. And of course, if dollar index does push higher this week, and we see the negative correlation continue to grow and strengthen, then it's quite likely we are going to see gold prices retreat off 1945 and probably drift lower as the week progresses. Right, the first support is identified if we zoom out a little bit at this very significant level at 18,080.30. So you can see price making significant swings here on 25th of February, finding a little bit of support on 27th of April. Then when it finally broke through, there were three instances it came close to the level resistance level, but never actually broke through, right? And then of course, as recently as 21st of August, price bounced off, or came close to this level and then bounced off it as well. So you can see how this overlap level at 1880.29 is acting as a significant support level, and we've highlighted it as a zone. As you can see, the level between the body of the candle here and this level is identified as the support zone for gold. All right, hi Nick. All right, yeah, okay, I can do a comparison as well. I think, wait, let me try and do a comparison with the dollar index. I'll do it as, I think a percentage scale would be much better. Right, okay, so this, okay, on the top chart, I've got the price of gold. On the bottom, I've got the dollar index in terms of percentage. So as you can see, in 5th July, when the dollar index dropped in value from 5th July to 13th of July, we can see gold making, let me just highlight it as a box, maybe it'll be better here. You can see this is, okay, wait, hang on, should it be, okay, okay, maybe I'll just highlight it as horizontal bars. I think that'll be a little bit easier. So okay, when you see, right, so during this period here, where we see the dollar index fall in value, we can see gold rising as well. So this is what I mean by negative correlation. But then if I add in, if we look at this period here, between 13th of July to 24th of July, where the dollar index actually increased in value, actually gold prices also peaked higher first before going up. So you can see, you can just see quite closely how the negative correlation plays out very strongly here. Whereas during this period, it is between, was this 13th of July and 24th of July, the negative correlation actually weakens a little bit, and then finally it strengthens again. So over here, as you can see, dollar index then starting to rise, right? So during this period here, which is between 24th of July and 18th August, 17th August, you can see dollar index climb very strongly, and we see the negative correlation uh, play out as well. You can see gold prices falling as well. Then over here recently, despite dollar index going higher, gold prices also went higher. It's only here on 25th of August to 30th of August where the negative correlation strengthened as well, or came into gained significance, and then we saw gold edge higher. So this is how you can see how the negative correlation plays out. So what I did was I went to the plus or the compare signal, then you choose whichever symbol you want, and it's better to usually set the second symbol as a percentage scale rather than as a price scale. All right, so this is how you can try and observe the actual positive correlation or negative correlation in any between any pairs. All right, so I'll just tidy up this a little bit here. All right, okay, of course, and then the second resistance is this nice overlap level here at 1981.99, but that's just simply too far. But do take note, there's a very strong resistance zone for gold at 1945.31. All right, we'll move on to Dow Jones, and then we'll do pound yen as well. Hi Mando, I see your request. And right, okay, we'll do Dow Jones, and then we'll go on to pound and the pound yen. All right, okay, so Dow Jones. All right, here we are. All right, so daily time frame. So equity markets have been a bit mixed since 1st of August, right? We've seen a very strong bounce since mid-July all the way till end of July, and then we saw it consolidate and then finally break lower and then find resistance again at 35,000, right? So this level, first resistance, is identified as a significant overlap, which we can see price finding support here before finally breaking lower and then running into resistance last week as well. So first resistance is identified at 35,018, which is a strong overlap. Second resistance, of course, is at this significant or rather multi-swing high, I guess you could say, that took place towards the end of July, which is at 35,734. All right, okay, and then not only that, we've also used the Fibonacci extension tool, right? So we've done the extension starting from here, 10th of July up to 27th of July, and then ending with 21st August. So we are using the 78.6% to act as a secondary factor to help us identify the second resistance. First resistance is here at overlap, this overlap level 35,000. Right, what about first support? Okay, we've used also the Fibonacci retracement at 78.6%, starting from the swing low on 7th of July, going up to 28th of July. And if we zoom out a little bit, you can see how this level at 34,281 has actually acted as a very significant level in terms of resistance and support as well. More resistance, you can see multiple times where price has run into resistance at this level. Of course, there are a few instances where price broke above it briefly, but it proceeded to retreat and drop lower. So you can see this level has acted as a major resistance in the past, and which now should act as a pretty strong support level. Right, okay, and then the second support level is this overlap at 33,630. You can see price making a significant swing here on 19th of May. Then after price broke through, acting as support on 7th of June, 23rd of June, as well as 10th of July. And also, if I zoom out a little bit, we see a very nice strong ascending trend line on Dow Jones as well, where you can see price bouncing off this level here, 11th October, then again around 20th of March, as well as 23rd of May, 1st June, and as recently as last week, 25th of August as well, or 2 weeks ago, sorry, right, about 10 days ago. Right, so you can see this is a relatively strong support zone for Dow Jones. We have the ascending trend line, we have the strong overlap support, as well as the 78.6% Fibonacci retracement. All right, so that's Dow Jones. All right, and then we'll cover pound dollar and we'll wrap up with pound yen as well. All right, okay. So of course, if the dollar index has been rising strongly and looks like it could continue the bullish movement this week, it's very likely the pound is going to fall as well, right? And we see that clearly here. So similarly, just like the Aussie dollar, we have this level at 1.2554 labeled as downside confirmation. So as you can see, uh, the pound has sort of ranged between 1.2788 and 1.2565 since early August. You could say this somewhat has been ranging, roughly ranging between these two levels. So hence why we've called this, labeled this as a downside confirmation, because if it does break through this level, then it's quite likely we'll see the pound fall all the way towards 124 first at least, and then the first major support comes at this significant swing here. Right. So if the dollar index does continue to rise strongly this week, we are looking for a bearish confirmation or downside confirmation on the pound at 1.2554, which is also a nice overlap level. You can see a significant swing take place on 2nd of June. The price found support around here, and then of course finding very nice support at the beginning of last week as well. So this is the downside confirmation. This dotted line here you see is the intermediate resistance level. You can see price making a swing high here on 9th of May, as well as a swing low on 29th of June, and finding support again, briefly finding support on 3rd of August as well as 14th of August. So we've labeled this as an intermediate resistance level should price bounce off 1.2554. And the first major resistance for the pound is at this overlap level here. We see price finding support on 24th of July, and as well as the 28th of July, and then of course finding resistance after. Okay, so this is what we expect for pound. So of course, if dollar index is rising, do look out for the downside confirmation at 1.2554 for the pound. All right, next is pound yen. All right, we'll wrap up with pound yen. That's over here on my crosses. Where are my pound crosses? Or would it be under my yen crosses? Yeah, I believe it should be. Hang on, pound. All right, hang on, doesn't matter. Okay, we'll just search for it here. Which one is it? Okay, this is the one. It took a while for the levels to load, I believe. Okay, yep, sorry. Took a while for the levels to load. Okay, here I am on the chart for pound yen. Okay, let's just zoom in a little bit here. All right, okay. So you could say since 17th of August, mid-August, pound yen has ranged between what is this 183.24 and 186.42. Right, it's sort of been ranging between these two levels. We do see a strong support, and we see a nice overlap level as well. Price making a significant swing here on 1st of August, and then finding support on 23rd of August as well as 25th of August. And it does look like it found a little bit of support last week on Friday as well, 1st September. So the yen is generally been quite weak as well. If you do look at all the other yen crosses, the yen has been relatively weak in recent days, except of course for this last 2 days. So we might see pound yen bounce off this level again. Now, first resistance is obviously here, which is at 186.42. Second resistance, although it's a bit far from where price is currently trading, is at 188.47. This was identified by using a Fibonacci projection. So we started this projections on 7th of August, ending with us going up to the swing high on 22nd of August and ending with the swing low on 25th of August. So we've used this 78.6% Fibonacci projection level to help us identify the second resistance, because there's no other major overlap. You can argue that pound yen has made a all-time high pretty much on 21st of August, so there's no other major resistance level. So you can see how much the yen has actually been devalued versus the pound, especially in 2023, right? If we just zoom out here, you can see price made a high at end of October, made another high on 2nd of May, and then price finally broke through this 52-week high, and then it's now starting to make new all-time highs, or it made new all-time highs, and it's and it's currently ranging between 183.24 and 186.42. All right, second support is found at this pullback level. We see significant swing bounce here that took place on 4th of August, and we also see a nice Fibonacci retracement level at 61.8%. So this retracement started on 28th of July, ending on 22nd of July, and we view 61.8% as it lines up very well with the swing low bounce here at 180.40. So this is how we've identified the levels as well. And as you can see, markets have just opened, and we can see the pound move higher today, right? It's opened in the green, right? So since markets have opened, let's just quickly take a look at how the majors are trading, and then we'll I'll call it a day, right, for this session. All right, okay. So as you can see, markets have just opened, very nice. So pound yen is edging higher. What about dollar index? Dollar index, do we see it yet? No. So dollar index is not open. Okay, this is because, as I said, the US labor market is open. I think maybe dollar index might be opening a little later. There might be some delayed timing on the dollar index, but we have seen the euro open. Right, here we go, 5th September, it's open in the red. Oh, sorry, 4th September here, we've opened in the red. And for the pound as well, it's open in the green a little bit. Dollar franc has opened in the red. Dollar yen also opened in the red, I believe. Oh no, it's in the green. Right, and Aussie is not open yet. We might be a slight delay on the charts. All right, okay. So this is how we've seen. Okay, so we just end up with dollar index. All right, we've had a strong finish last week. It's quite likely price is going to push higher. And just going back to the slides, just do take note of the key events that are coming up this week. Right, do take note. Today, 4th September is Labor Day in the US, so it's a bank holiday, so stock and bond markets are closed. We have the RBA coming up tomorrow on 5th of September, where they're likely to keep the cash rate on hold. Bank of Canada will make their announcement on 6th of September. This is a bit open. We're not sure whether they're going to keep rates on hold or raise it higher. For RBA, it does seem they're going to keep it on hold. Very likely, again, this would be the third meeting in a row. As you can see, inflation starting to pull back sharply, and we also see PMI activity falling. Canada is a little bit different. After inflation falling rapidly over the last 12 months or so, it's starting to edge higher. Will that give them reason enough to raise rates again, or are they just going to keep it at 5%? And of course, we have unemployment claims in the US as well. Do take note. A number that comes in lower than the forecast is actually a bullish catalyst for the dollar index. And of course, if the number comes in higher than the forecast, that's negative for the dollar index. All right, okay, so we'll round up with the ending disclaimer. Right, do take note of the risk warning that comes with trading Forex and CFDs, as they carry a high level of risk to your capital and should only trade with money you can afford to lose. Trading Forex and CFDs may not be suitable for all investors, so please ensure that you fully understand the risk involved and seek independent advice if necessary. All right, thank you everyone for tuning in today. I hope this has been a great session for you. And do take note of all the upcoming webinars for this week by IC Markets as well. All right, thanks everyone. Thanks Nick. Thanks Philip. Thanks Mando. Thanks everyone for tuning in. It's been my pleasure. And yeah, do take note of the levels that we've highlighted on the daily time frame, and also do take note of the key economic events that are coming out this week as well. All right, guys, take care. Have a great trading week, and I will probably see you at some point during the week as well. All right, best of luck, and I'll see you guys soon. Thank you.